All right, thank you guys. Welcome to the daily market wrap for Thursday, the 2nd of July. So a few market developments overnight. The Eurozone CPI surprised coming in a bit softer than anticipated. What sort of impacts do you think this is going to see around the markets in general?
Yeah, 100%. So markets were expecting the CPI to either hold or sort of come in a little bit lower than the previous month in Europe, but it actually dropped more than expected. So what that means is at a higher level, inflation is starting to cool a little bit, sort of still elevated, but starting to sort of trend in the right direction. What it means more broadly is obviously it's going to impact currency markets. So the euro has experienced a drop-off overnight, and it's that based on the long-term outlook of what the central banks do with the interest rates as a result of this data, with inflation being the big data point the central banks look at when deciding interest rates. It's their key lever in how to control it. So yeah, obviously in Europe, we're going to see impacts across the euro, and then whether this is sort of the leading indicator of what happens in other economies like Australia and the US. We'll have to wait for the data to come out, but it does signal that maybe the inflationary pressures are starting to ease up a little bit.
And oil once again fell after Trump said the Iran talks are not going too well. Once again, I mean, do we see this just continuing?
Yeah, it's just got to continue. I guess markets have kind of transitioned to staying cautiously optimistic, so they're not really reacting to the bad news as much as they're reacting to the good news. So we saw on the weekend, last weekend, with the increased conflict, increased fighting, you would have expected oil to spike up. It didn't really do that. Whereas Trump announcing talks are going very well, who knows if they are or whether he's just spinning things. Markets actually more reacting to that, and sort of oil is dropping off based on that. So it just shows the shift in the sentiment of the market, sort of being nervous about it to now sort of expecting it to be good unless we hear something catastrophic.
Okay. So I guess being overly optimistic in that sense, is there an inherent risk in that for the case that things do go wrong?
It just means if things do turn and the narrative do turn, the downside is going to have a greater effect than if people would sort of, I guess, play the cards as they're dealt.
And today in Australia, so the month-on-month trade balance expected to rise by about 400 million. Can you tell us what this figure is and what it means for the Australian economy?
Yeah, the trade balance is just the difference between our what we pay for imports versus what we gain from our exports. Obviously, we're a very commodity-rich country, a lot of natural resources, so we're a very export-heavy economy. So with the trade balance growing, that means our exports are growing sort of greater than what we're importing. That's got to be good for our economy, as sort of our big companies, other big mining companies, make up a big portion of our ASX, so that's got to be really positive for that, and it's got to be strong for the Aussie dollar as well.
Okay. So this is the difference between the imports and exports.
Yes.
So this appears to be a large increase, but it's obviously on both sides. How much of an actual impact is this compared to sort of typical releases?
It's probably on the lower end. It more just gives a broader outlook of the health of the economy, and like I said, those larger cap companies that we have, a lot of the big miners. So in terms of comparing to an interest rate decision or a CPI or something like that, it's got to be on the lower end compared to that.
Okay. And back to CPI. So the Swiss CPI coming out today and forecast to drop 10 basis points. So again, following the sort of Europe trend there, are we expecting to see some similar results?
Yeah, so Germany posted before the ECB did, their CPI came in softer than expected. The Eurozone just came in softer than expected. So it'll be interesting to see the Swiss today. It is tipped to drop. Whether it drops a bit more than expected, that will sort of confirm the inflationary easing trend. And
a big one tonight, so the US Non-Farm Payrolls. you want to just remind everyone what this announcement is and what it means? It's one of the bigger ones, for the economy as a whole. So you could just talk about that a little bit.
Yeah, this is sort of the big employment statistic coming out of the States. So it's run by the Bureau of Statistics, and it's based on surveys of, as in the name, non-farm payrolls. So it's sort of all the companies excluding the agricultural sector, which is sort of a large portion of employment. And what this is looking is the difference in the new jobs sort of created in the US economy over the previous month. So last month there was 170,000 new jobs. They're expecting that to drop to 110,000 new jobs. So still sort of heading in the right direction, but sort of a slight easing in that. Like with most data releases, it's not the actual figure. It's, did the figure meet expectations? Did it fall compared to expectations, or did it exceed expectations? And so we don't look at the figure in isolation. We sort of look at it in the broader picture of how did it fall into line with analysts' prediction, and then what it means for the broader economy. Again, this feeds into, it's a big data point for the Federal Reserve in their rate decisions, so it has a big impact on the US dollar.
Yeah. And why do they remove the agriculture sector from this release? And is that a separate release in itself?
I believe they do a separate release for that, but just agriculture is obviously very volatile, very heavily dictated by the seasons, so when they can sort of produce, when farmers can sort of yield their crops. So yeah, there's a lot of fluctuations in that. This sort of gives a more, like we do with a core CPI, we sort of take out outliers and give a core sample.
Okay. And some big moves overnight. Oil once again right at the top of the list there, kind of at what we'd expect with those sort of talks going on.
Yeah, this was basically just based off Trump saying talks are going very well. So the two sides aren't actually talking directly with each other. They're using Qatar as the mediator. But yeah, the oil price dropped to 3%, just above $70 a barrel. So yeah, we can see how much Trump still moved the market just with his social posts, I guess.
And just remind us on the level again before the conflict started overseas.
So the pre-conflicts between sort of October to January last year was sort of fluctuating between $55 and $65 a barrel. So just above 70 is obviously still slightly elevated, but compared to the $120 at the height of the conflict, it's come a long way off, and we can see it's sort of trending back to the pre-war levels.
Yeah, I do remember you saying it would never get back down there, so we'll see. The euro pound now, again, you've spoken about those releases coming out.
Yeah, this is purely based off those inflation numbers. So the euro pound's at the lowest level for the past 12 months. Obviously the pound, after Brexit, they're sort of a little bit more separated from the Eurozone data, but obviously still very intertwined. But the euro did come off based on lowering inflation expectations, which means the ECB might not need to raise rates, which obviously has a big effect on the strength of the euro.
And then NASDAQ, which we spoke about the other day, but a lot of those gains we saw from a few days ago sort of come off.
Yeah, so Micron had a chunk taken off their share price. Again, this is just markets weighing up AI optimism versus AI reality, versus like spend versus revenue coming in. So markets are just trying to weigh that up with the backdrop of a hawkish Fed and what they're going to do with their interest rates moving forward.
Okay. So this is all on the back of a single company, really?
Yeah, a large portion of that, because they sort of act as sort of a beacon as what the market's sort of feeling in regards to technology and AI.
And some big movements in gold overnight. So starting with a big fall and then big run up and back down again. Were these on the back of some of those talks and announcements last night, or? How are they related to?
Yeah, definitely. It's just the market trying to figure out sort of where to price gold. We can see the overall movement wasn't drastic, but there was just a lot of volatility. There were a few numbers out of the US. The PMI came in a little bit soft. The ADP employment data, which is a separate employment data to the non-farm, not as sort of constructive, but markets still sort of look at it a little bit. That came in slightly softer, so that's where we saw the rise in gold. But then it sort of came back down after everyone sort of understood that Fed expectations are still a rise. The US dollar is sort of staying strong and sort of still trending in a positive direction.
And starting to push back down below 4,000. Can you remind us again, what was gold at its peak a few months ago?
It got up to 5,400, was it? I believe that was the peak towards the start of the year. Was it 5,400? You remember? Don't know. Yeah. It got up. It was like over 5,000 for an extended period. So it's come off over 20% since that level.
And the chart of the day, so SpaceX, pretty much SpaceX since the IPO. What's the movement's been since then?
Yeah, just sort of, obviously we talked a lot about the SpaceX IPO, so just checking in what it's done over the past 2 weeks since it's sort of been consistently trading. And we saw we had the big spike at the start where it got up to $220, $225. It's come right off, so people... just a lot of profit taking after I think IPO'd under $140, so people just taking their profits after a couple of easy days of trading for them, and it now seems to have stabilised over the last week around $155, $160. We are hearing news that there's sort of increased short sellers for this stock, so people betting on the price to drop. But there's clearly a lot of retail demand for it specifically, but there's also got to be institutional demand. Anything sort of tied to Elon and the AI story is always just got to be inflated at this point in time. So it's interesting to see that battle of, I guess, people trading fundamentals expecting it to drop, and then people trading the optimism expecting it to rise.
And do you know if any of the main sell-offs were, from any of the, I guess, larger shareholders, or are we talking just retail?
I'm not sure in terms of institutional. I know there's a 180-day lockup of actual SpaceX employees before they can touch their shares, so it wasn't anyone sort of inside the company itself. In terms of institutional investors, I'm not too sure what the actual breakdown is between that and retail.
Okay. And the article of the day, so what's this one about? Wash talking at the ECB?
Yeah, so it's a bit of that, but it's Wash wants to change how the Fed does things in terms of how they look at inflation, how they report inflation and report their rate decisions. So he's created 5 separate task forces to look at this over the next 9 to 12 months. And this is just sort of looking at how he can possibly, the options at his disposal and how they look at inflation and what that'll mean for the interest rate decisions moving forward.
Yeah, the states love a task force, don't they? Yeah. Nice one, thank you.